All right, let's dive in. We're tackling gold this time. Gold. It's been a crazy week, right?
It really is.
Like all-time highs, and then suddenly, bam, everyone's scratching their heads wondering what's next.
Exactly.
So we've got experts, we've got Main Street investors, and they're all over the place.
Yeah.
Totally divided. So we're going deep with the Kitco News Weekly Gold Survey to try to make sense of it all.
It's fascinating, because you have this almost perfect split
Yeah.
between those who think the rally is going to keep going strong and those who are like, brace yourselves, a correction's coming.
Oh, yeah.
And then, of course, you've got the folks who are just sitting on the sidelines watching it all unfold.
Classic, the wait-and-see crew.
Exactly.
Always a good strategy. But speaking of unfolding, let's talk about what gold actually did this week. It was a roller coaster, wasn't it?
It was a wild ride. So picture this. Gold starts the week strong, pushing towards $2,740 an ounce. Asian and European markets, they're loving it, buying like crazy. But then, as North American traders wake up and join the party,
Uh-oh.
things take a turn. Gold prices, they start dropping.
It's so interesting to me how often we see gold prices rise during those Asian and European trading hours and then dip when North America comes online.
It is an interesting pattern, isn't it?
Do you think it's just a coincidence?
Well, I think it highlights how interconnected global markets are.
True. Yeah.
And maybe a little tip for our listeners. Being aware of these global trading times, it could give you an edge, whether you're buying or selling gold.
An edge, I like it. Strategic timing.
Exactly. Now, this back and forth, this volatility, it continued all week. Gold, it struggled to stay above that $2,750 mark. It's almost like there's this constant tug of war going on
A gold tug of war.
between the bulls and the bears.
So we've got this exciting price action, definitely keeps things interesting. But what are the experts saying? Like, what's driving all of this, and where do they think gold is headed?
Well, like I mentioned, the experts are pretty divided. You've got analysts like James Stanley over at Forex.com and Bob Habercorn from RJO Futures. They're feeling pretty optimistic.
Optimistic meaning?
They're in the gold's going up camp.
Okay, the bulls. Got it.
And they point to that upward momentum we saw,
Yeah.
as a sign that this rally, it's not over yet.
It's got legs.
Exactly. And they're also talking about increased safe haven demand. Because remember, when things are uncertain globally,
Oh yeah, investors get nervous.
exactly, they flock to assets that feel safe, stable. And gold, it's always been seen as that kind of safe haven, especially during times of global turmoil.
That classic safe haven. Okay, so safe haven demand is up.
And then you've got the long-term drivers for gold. Things like inflation worries, always a concern.
Especially these days.
And then geopolitical risks. There's always something brewing somewhere in the world. And these factors, they're not going away anytime soon.
True, true.
Oh, and Jim Wyckoff from Kitco, he's pointing to some positive technical signals we're seeing in the charts too. So a lot of reasons to be optimistic if you're in that camp.
So one camp is saying, buckle up, we're going higher. But what about the other side? What about those who are maybe a little more cautious?
Well, you have folks like Mark Chandler from Bannockburn Global Forex and Colin Ciesinski from SIA Wealth Management. They're suggesting that we might see a correction.
Okay, pause, a pullback.
Right. Chandler, he's talking about a period of consolidation,
Yeah.
which basically means the market takes a breather, catches its breath,
Yeah.
maybe a pullback towards $2,600 and then another push higher.
Makes sense.
And Ciesinski, he's thinking a correction might be needed after, such a strong run-up in prices, especially with no big central bank meetings this week to really shake things up.
Interesting point. Now, I've got to ask you about Darren Newsom from barchart.com. He had this really interesting way of putting it. He talked about stepping in front of this runaway train.
Oh yeah, I love that analogy.
What do you think he meant by that?
I think he's acknowledging that, yes, there might be a pullback, a little bump in the road.
Little bump, yeah.
But he still belies that the long-term trend for gold, it's still up.
Still up.
Because those inflationary and geopolitical pressures, the things that are driving gold higher, they're not going away. And gold, it often acts as that shield, that safe haven during these uncertain times.
That's right. So we've got the bulls, we've got the bears, and then we've got Adrian Day from Adrian Day Asset Management, who seems to be taking a more let's wait and see approach.
Exactly. He acknowledges those long-term drivers, the things we just talked about.
Right.
But he also sees a possible pullback on the horizon. So he's in that wait and see camp.
Makes sense. Kind of straddling the fence a little bit.
Yeah. And what's fascinating is how this divide among the
Oh,
experts.
this is interesting.
It's mirrored by Main Street investors. Kitco poll, it shows that a slight majority, they're still bullish,
Still bullish. Okay.
but a good chunk of them, they're either bearish or neutral.
So it's like Main Street is echoing those same uncertainties that we're seeing among the professionals.
Exactly. It's almost like a reflection.
Yeah.
So that begs the question. If you were holding gold right now,
If I were holding gold right now,
what would you do? Buy, sell, or hold tight?
that is the eek question, isn't it? And I think to answer that, we need to dig a little deeper into the key factors that are driving this gold market tug of war.
Exactly. Let's unpack it.
All right, where should we start?
Well, let's start with the elephant in the room. Geopolitics.
Oh yes, the US election is just around the corner, definitely causing some anxiety in the markets.
Definitely. That uncertainty, it's fueling a flight to safety. Investors, they want to park their money somewhere safe. And gold, historically, it's been that safe haven during political turmoil.
It's seen as a bit more insulated, from those political swings.
Exactly. And it's not just the election, right?
That's true.
There are those inflation concerns we talked about, the potential for increased government spending, struggles to control inflation. These are big worries for investors.
Because they're worried their money will be worth less, right?
Exactly. So they turn to gold, which has this history of acting as a hedge against inflation. It's like a safety net during those uncertain economic times.
So we've got political jitters, we've got inflation fears, and then of course we can't forget about the global economic anxieties, especially with what's happening in China, that slowdown. It all just adds to this feeling of uncertainty, and it's pushing some investors towards gold.
It's all connected, isn't it?
It really is. And then we've got the US dollar, which is doing its own thing. The Fed cut rates, which usually weakens the dollar, right? And that usually gives gold a boost.
Right.
But the dollar, it's staying strong, so it's adding another layer of complexity to the gold market.
It's a push and pull, for sure.
Absolutely. Oh, and speaking of signals, we can't ignore those rising treasury yields. Those are definitely raising some eyebrows. What do those tell us about the market?
Well, when treasury yields go up, it's usually a sign that bond purchasers are feeling a little uneasy about the future. They're demanding a higher return on their investment because they see more risk.
So they want to be compensated for that risk.
Exactly. And this shift in sentiment, it can spill over into other markets, gold included.
So it's something to keep an eye on.
Definitely something to watch.
Okay, we've covered a lot of ground here.
We have.
And I think it's safe to say we've got a lot to think about.
A lot to consider. So many factors,
Sure.
right? But looking ahead, what events, data releases, what could really shake things up for gold?
Yeah, like what should we be paying attention to in the coming week?
Well, Friday morning, the U.S. employment report for September, that's a big one. Economists, they're expecting job growth to slow down
Oh.
noticeably. And that could really fuel those recession fears that are already out there.
I see. So weaker job numbers could actually be good news for gold bugs.
It's possible, yeah. Gold often does well when people are nervous about the economy. And then throughout the week, we've got other indicators coming out too. Tuesday, we have the JOLTS job openings report.
Ah, yes, Jolt.
Gives us a peek into the labor market, always interesting. And then Wednesday, oh boy, Wednesday is a data dump.
Hit me.
ADP employment data, advanced Q3 GDP, U.S. pending home sales, all in one day,
Wow, busy day.
giving us a snapshot of how the U.S. economy is doing. Oh, and we can't forget about the Bank of Japan. Their monetary policy decision comes out Wednesday evening as well.
So much data. Which of these would you say is the most important for gold investors to be watching?
Well, they all matter, of course. They all feed into the bigger picture. But for gold specifically,
Yeah.
I'd say keep a close eye on that U.S. employment report and the inflation data that comes out Thursday with the core PCE release.
Okay, employment and inflation. Got it. So we've got economic data, we've got all those expert opinions. Anything else that can help us solve this gold puzzle?
Well, we can't forget about technical analysis.
The charts.
The charts, exactly. Michael Moore, he's the founder of Moore Analytics. He's been studying the charts, and he's got some interesting insights. He believes gold is still in a long-term bull trend,
Bull trend meeting.
meaning the overall direction is up.
So good news for those who are holding gold.
Yeah, but here's where it gets interesting.
Oh.
Moore thinks gold might be getting a little tired, above $2,863 for census,
Tired, meaning
it might be running out of steam. He thinks that recent surge above $2,741.07, that shows continued strength in the short term. But he's also watching for signs of a potential reversal.
So a possible ceiling for this rally.
Exactly. He's basically saying, enjoy the ride, but be ready for a dip.
Okay, I see. So he's using those specific price levels, those market movements, to try to pinpoint where things might turn.
Yep. And his analysis is suggesting a bit of caution is warranted, even though that overall trend is still bullish. Now, it's worth noting, not all technical analysts are as bullish as Moore.
Really?
Alex Kupskevich from FX Pro, for example. He sees a correction coming. Thinks gold can pull back towards that $2,670, $2,700 range in the coming week.
Interesting.
Now, he's not saying that would break the long-term bullish trend.
Okay, just a blip.
Yeah, but a signal to be a little cautious.
So we've got different views from the fundamental analysts, different views from the technical analysts. It's a lot to process, a lot of uncertainty. How can our listeners make sense of it all?
The key is to stay informed. Understand all the different forces that are at play in the market, and then, based on your own risk tolerance, your own investment goals, come to your own conclusions.
Do your research, don't panic.
Exactly. But honestly, isn't there something exciting about all this uncertainty?
I kind of think there is.
This gold market, it's always twisting and turning. You never know what's going to happen next.
Keeps things interesting.
It really does. And as we wrap up our deep dive into gold price predictions, I want to leave you with this.
So, where do we go from here? Like, with everything we've discussed, the economic data, the politics, what the experts are saying, what's your best guess? Where are gold prices headed? What should our listeners be watching for?
That is the million-dollar question, isn't it? It all comes down to how all these pieces fit together. Global events, economic indicators, and even just like how investors are feeling. Their psychology.
It's like we've given everyone the pieces of the puzzle, but they have to figure out how to put it together themselves.
Yeah, and the tricky thing is the puzzle's always changing. New information comes out every day. Sentiment shifts on a dime.
Yeah.
It's a moving target.
So how do we stay ahead of the game?
I think the key is to just stay curious.
Yeah.
Stay informed. Don't be afraid to challenge your own assumptions as you learn more.
Love that. Always be learning, right?
Exactly.
Well, I think that about wraps up our deep dive into gold price predictions for this week.
It does. But it's really just the beginning of your own exploration. The gold market, it's going to keep on doing its thing, with the ups and downs. And there's always the potential for surprises.
Always. So until next time, everyone, keep those charts handy.
Stay informed.
Pay attention to what's happening out there in the world.
And don't be afraid to embrace the uncertainty.
Because in the gold market, the possibilities, they are endless. That's it for us this week. We'll catch you next time for another deep dive.